SA 500, Audit Evidence. This standard on auditing explains what constitutes audit evidence in an audit of financial statements and deals with the auditor's responsibility to design and perform audit procedures to obtain sufficient appropriate audit evidence. Meaning of audit evidence. Audit evidence refers to the information used by the auditor in arriving at conclusions on which the auditor's opinion is based. It includes both financial and non-financial information. Audit procedures to obtain audit evidence. Audit procedures can be classified into two types. Risk assessment procedures. These are procedures performed to identify and assess the risks of material misstatement, as explained in SA 315. Further audit procedures, which include tests of controls. These are audit procedures designed to evaluate the operating effectiveness of controls in preventing, detecting, and correcting material misstatements. Substantive procedures. These are audit procedures designed to detect material misstatements. Substantive procedures include tests of details of classes of transactions, account balances and disclosures, and II, substantive analytical procedures. Methods to obtain audit evidence. Auditors can obtain audit evidence using various methods such as inquiry, seeking information from knowledgeable persons within or outside the entity, both financial and non-financial. Inquiries may be formal, written, or informal, oral. Responses may provide corroborative audit evidence. The auditor may also obtain written representations to confirm oral responses. Observation involves looking at a process or procedure being performed by others. Inspection, examining records, documents, internal or external, in paper or electronic form, or physically examining tangible assets. Recalculation, checking the arithmetical accuracy of documents or records. Reperformance, the auditor's independent execution of procedures or controls originally performed by the entity. External confirmation, audit evidence obtained as a direct written response to the auditor from a third party, confirming certain information. Analytical procedures, evaluating financial information by studying plausible relationships among both financial and non-financial data. Selecting items for testing. While obtaining audit evidence, an auditor may examine all items, 100% examination, select specific items, or use audit sampling, using the work of a management expert as audit evidence. 1. Meaning of management expert. A management expert is an individual or organization possessing expertise in a field other than accounting or auditing, whose work is used by the entity to assist in preparing the financial statements. Examples include actuaries for calculating provisions, or valuers for determining fair value. 2. Evaluating and using the work of management expert. When the information to be used as audit evidence is prepared using the work of a management expert, the auditor shall evaluate the competence, capability, and objectivity of the expert. II. Obtain an understanding of the work of that expert, and III. Evaluate the appropriateness of that expert's work as audit evidence. The auditor may obtain information about the expert's competence, capability, and objectivity from sources such as previous experience with the expert's work, discussions with the expert, knowledge of the expert's qualifications, and published materials authored by the expert. While evaluating the appropriateness of the expert's work, the auditor considers the relevance and reasonableness of the expert's findings or conclusions and their consistency with other audit evidence, the relevance and reasonableness of significant assumptions and methods used, and the relevance and completeness of the source data used by the expert. 3. Threats to management expert's objectivity. The expert's objectivity may be threatened by factors such as self-interest, advocacy, familiarity, self-review, and intimidation threats. Although safeguards may reduce such threats, they cannot eliminate all of them. Therefore, the auditor should discuss with management and the expert any interests or relationships that might create such threats and understand what safeguards, if any, are in place. 4. Factors affecting the nature, timing, and extent of audit procedures regarding the work of a management expert. The auditor's approach may vary depending on I. The nature and complexity of the matter. Roman 2. The risk of material misstatement involved. Roman 3. Availability of alternative sources of audit evidence. Roman 4. Whether the expert is employed by the entity or externally engaged. V. Whether the expert is subject to technical performance standards. Roman 6. The auditor's knowledge and experience in the expert's field. And Roman 7. The auditor's previous experience with that expert's work.